Hey everybody, welcome to my second channel where we're basically just going to talk about world economics and finance in a much more relaxed setting. Maybe we'll call it Yaponomics or something. And we have a lot to yap about today. So as always, my name is Derek. I got my degree in finance, so you don't have to. The three main things I want to cover in this video are tariffs, our recession risk, and the stock market. And we're only halfway through April, and what a wild economic ride it's been so far. So the month basically started out with Liberation Day on April 2nd. This was Trump's big tariff day. He basically announced what were reciprocal tariffs. Now, in my opinion, these weren't actually reciprocal tariffs. And that's because the way he calculated them was more so based on the trade deficits with these with these countries, not necessarily the tariffs that they have on us. And that's why you ended up with these crazy, insane numbers, 20, 30, sometimes as high as 100% plus in regards to China. Now, April 2nd was Liberation Day. The reciprocal tariffs were set to take effect on April 5th for the 10% blanket tariff on everybody. And then April 9th, for the much higher tariffs. Now, what's interesting is April 5th, they took effect, all well and good. Then April 9th came around, and Trump only left those reciprocal tariffs active for less than 24 hours. Now, of course, the administration is going to say that the reason for this is because a ton of people called a ton of countries called the White House to negotiate better trade deals. Now, if you're going to ask my opinion, that's not the case. The reason why Trump paused his tariffs was because of the bond market. Now, we saw something very interesting happen in the bond market, and some people are attributing it to bond vigilantes. Bond vigilantes was a term that was used a lot in the 80s and 90s, and basically it was where large institutions or many investors basically crashed the bond market to make government debt more expensive because they didn't like a policy decision. That's kind of what happened when his reciprocal tariffs were implemented. The bond market crashed. And I don't think Trump saw this coming, because usually what happens is when the stock market crashed, because the stock market also crashed close to 15% when it comes to the S&P 500 in a single week when these tariffs were announced. Now, usually what happens is when you have a stock market crash, investors move to safer assets. What's the safest asset on this planet? U.S. bonds, right? I mean, who's going to pay their debt back if not the U.S. government? So usually you have a stock market crash and then you have bond yields come down. Because remember, bond yields, the bond coupon is fixed. So if bond prices rise, the yield compared to the price comes down. Now, if you have more demand, right, prices rise, that bond yield is lower. That's not what happened. You actually had investors fleeing the bond market for other safe assets, like bonds in Germany and other European Union countries. So this caused bond prices to crash, which of course made the yields go up. Now, if the yields go up, it means that it is more expensive for the US government, in this case the Trump administration, to issue new debt. And of course, I'm sure you're well aware that the United States has $36 trillion plus of debt, and it has a close to $2 trillion deficit on the budget every single year. So in my opinion, seeing those yields massively increase, 50 basis points we're talking about, and the 2-year treasury, which is a shorter term treasury bond, that actually increased the most single day increase since 2009. So either Trump is well aware of these effects, or his advisors are well aware of these effects, because crashing the bond market like that has a direct impact on the world order, right? The world order currently is a US dollar as the world reserve currency. It is bonds, US bonds, as the safest asset on the planet because the US government has never defaulted, at least not technically. So someone in his administration, in my opinion, knew this, and that is what caused the pivot. Less than 24 hours later, Trump announced a 90-day pause on these tariffs. And of course, the stock market skyrocketed and bond yields came down because more demand rushed back into bonds. That is basically, when it comes to the administration in April under Trump's administration, economically, that was the major event. And it had repercussions, which remember, I said I want to talk about two other things, stock market and recession risk, because those tariffs affect all of that. Now, when it comes to the stock market is just a conglomerate of all these companies that sell stuff in the United States and abroad. And when Trump implemented these tariffs, the stock market did not like that. It basically crashed. The Dow Jones moved under 40,000, which is crazy. The S&P 500 moved close to, if not, it may have moved under 5,000 from a peak of well over 6,000. And then you had individual companies like Apple losing tons of equity value. And of course, Trump's golden child, Elon Musk, and Tesla. Tesla lost a ton of value, which it's already been on a downward slide. Now, why did this happen, right? Because the stock market reacts not because of tariffs, but because of the consequences of tariffs or the potential consequences. And that brings me to recession risk. Now, the stock market is jumpy. Let's be honest, okay? The stock market and investors are jumpy. So when it comes to short-term moves, it is always an overreaction. With that said, the stock market is a fantastic gauge into how basically the makeup of all investors view the future of the economy. So it is not the economy, but it's a good gauge for the economy. Now, the stock market went down because obviously if tariffs are implemented, the cost of goods sold for these companies are going to go up, which means prices for consumers are going to go up, which means inflation is going to go up, which means that people can buy less stuff, which might slow down the economy, or it might trigger the Fed to raise the federal funds rate, which might slow the economy. So then, of course, recession risk increased. You had many massive investment banks raise their odds of recession risk for 2025. Some of them above 60%. I believe it was JP Morgan. Remember, these are unedited, much more chill videos, so don't quote me on that. But it was one of the major banks raised it to above 60%. Also, the betting market had the odds quite high. Now, why is that? Well, it's because of the tariff policies and because the impact on all these companies. Now, in my opinion, I still don't think we're going to go into a recession in 2025. I mean, call me an optimist. I just don't feel it quite yet. Now, that could absolutely change. But I'm also a data-driven man. I like data. I don't like anecdotal evidence. So we'll have to see the data. We'll have to see GDP data, which the Atlanta Fed, before this was announced, this was prior to his major reciprocal tariffs, had revised its GDP estimate from positive to negative on an annualized basis for the first quarter. That's not a good sign, but we'll have to see. Now, of course, the traditional definition of a recession is 2 consecutive quarters of GDP declines, but that's not the actual definition, I guess. The actual definition is when NBER, the National Bureau of Economic Research, says that we're in a recession. They're usually the ones who say whether we're in a recession or not. So in my opinion, I don't know if we're going to get there. We'll have to see. Maybe I'm optimistic. What I do think has increased dramatically is the risk of stagflation, which of course is every economist and every economy's worst nightmare. What is stagflation? Well, stagflation is basically the worst of both worlds. So sometimes when you have a really good economy, you have inflation because the economy is running hot. Sometimes when you have a really bad economy, you have unemployment numbers that increase, but usually you're only dealing with one or the other. When you have a good economy, you have higher inflation, but you have a good employment rate. When you have a bad economy, you have a not so stellar employment rate, but prices sometimes will stagnate or even come down. Why? Well, because there's nobody to buy it. But stagflation is basically increasing prices while people are losing their jobs. That is a recipe for disaster when it comes to the average American consumer. Now, I don't think that we're going to enter stagflation, but I do think the odds have gone up. There is a much higher than non-zero chance in 2025 that we enter some form of stagflation. Now, some of you, of course, will say we're already in stagflation. I get it. Obviously, I try to stick to the data. Now, a lot of the time, the data from NBER or the BLS tends to be revised. I understand that, but I try my best to stick to the data. Now, here's the thing. Why would stagflation happen? Again, I mean, all of this stuff points to tariffs, and that's why a lot of economists are saying this is self-inflicted. I mean, the outcome in 5 years, 10 years, if it's more manufacturing jobs, maybe more manufacturing back home, maybe, but the end goal better be worth it, because the pain that we're going to have to go through if these tariffs are actually implemented, although he likes to pause them all, Trump, would be severe. Now, tariffs would, of course, increase the prices of goods. Why? Because it costs companies more to make things, so they're going to charge more to the consumer. Now, it's not a one-for-one, but you know how companies are. Corporate greed is a real thing. So if their costs go up 50%, they might just increase the sales price 50% because, oh, look, our costs went up 50% or 100% depending on the tariffs. Even though in reality, it's not a one-for-one because tariffs affect cost of goods sold, not directly sales. But okay, so now you have higher prices, okay? But at the same time, tariffs make everything more expensive, right? Which can stagnate the economy because people buy less stuff. So you almost have this situation where companies are forced to raise prices to keep profit margins, because you got to remember, some of these companies are operating with 1, 2, 3, 4% profit margin. Not everybody's running at 50% profit margin. I mean, look at Walmart. Walmart's like at a 1 or 2% profit margin, okay? And we buy a ton of stuff as American consumers from those types of companies. And those types of companies buy stuff from China. That's where a lot of their inventory is from China. So they're going to get hit with massive tariffs. So they're basically forced to raise prices, not because the economy is good and they can, right? Because when the economy is good, people are making more money, companies can raise prices. This is a forced price raise because they have to cover their new, much more expensive costs. So now you have forced inflation, and then what? And then you have those same companies basically having to find areas where to cost cut because people are going to buy less stuff, because people aren't going to make more money right off the bat with tariffs, if ever. The whole thing about tariffs is to bring back jobs to the United States, right? But that doesn't necessarily mean high-paying jobs. A lot of manufacturing jobs might not be the highest-paying jobs, and when you look at the unemployment rate, it's already quite low. So, okay, you bring back some more jobs, but the real problem, and I say this time and time again on the main channel, that the main problem is a price-to-wage problem. We have a price-to-wage problem in this country, not necessarily a jobs problem. So tariffs could make this ratio between prices and wages even worse, which could absolutely cause stagflation. Now, I still think this is the least likely scenario. I think if tariffs are implemented to the full effect, or even partially, inflation for sure. I mean, that's basically a guarantee. But it's interesting to see. We're barely halfway through the month, and we've had an insane April when it comes to economics. And then, of course, you have, a shout out to tax season, which yay. But tax day just came and went. And that brings me to my final topic for this video, which is Trump obviously wants to cut taxes. Tariffs are basically a tax with more steps. It's basically a tax with extra steps. Now, why does he want? Well, how does he cut taxes? He has to find the tax revenue elsewhere. So that might be tariffs, that might be cuts to Medicaid, Medicare, etc., or other social programs, which he has talked about. But I want to end it here with saying that Trump has still said and has gone on record that he wants to lower taxes for people making $150,000 or below. He wants to lower taxes on tips, on Social Security, and on overtime pay, yet we have yet to see that be implemented. So we will have to see if the final bill, the final budget bill, includes these specific things. Because right now, a lot of Trump's tax cuts are more so to the upper income earning class. Now, we'll have to see what the final bill is. That has yet to be released, that has yet to be finalized, that has yet to be put into place. We will have to see where the tax cuts end up, whether it's for the very wealthy or for the middle class, and we'll have to see how these tax cuts are paid. Of course, you can pay for it with deficit spending, you can increase the national debt, which are both, they have both been floated as ideas in this bill or in this budget resolution, but we'll have to see how it actually ends up happening. So with that said, I'm going to end this video here before it gets way too long. If you like personal finance, world economics, and investing, you are in the right place. If you want more edited videos with way more cuts, I'm probably hardly going to cut these videos, maybe here or there to make it shorter, but these are going to be basically unedited. If you want more edited videos, check out my main channel, which is just my name, Derek Polishek. But if you like the more casual style, I'm going to try to do these, I don't know, once a week, once every couple of weeks. Obviously don't want to bore you and waste your time, but anytime that there's something to report, we will talk about it. And with this administration, I mean, the economic news is it's probably going to be crazy, erratic, and there's probably going to be a lot to talk about. So I hope to see you in the next video. Until then, I hope you have a fantastic rest of your day, and I will see you in the next one. Take care.